Hey, welcome back. I hope you're having a good trading week so far. There's a good example now on the Australian Canadian dollar right now, and it gives a good example of how not to trade support resistance and also what to look for in support resistance that many traders overlook. So you can see right here, if we look at it, price is pushing higher and there are a few swing highs. So let's just draw our support or resistance area here up here. So you can see we captured this high here. This high came a little bit short, so maybe we can adjust that a little bit. Here is a previous high. Let's scroll back a little bit. We came short here a little bit. Here is it not respecting that much anymore. But what this shows us is that each time price is moving back into this resistance area, the distance between the swing points is becoming shorter and shorter. And let me show you what I mean with that. So you can see here the first to the second time, very long time price has spent not trading at this level, and then once it came back into it, there was a strong sell-off. Then the next time we come in much sooner, very short period between those two highs, and now the fourth time here right now, even shorter. And conventional technical analysis always tells you that the more often a price has come into a level, the stronger it is, but I strongly disagree here. The more obvious a level is, the harder it is to trade, because at one point everybody will have this on their charts. Everybody will wait till price gets there and then planning a sell trade. But if everybody is hoping to have the same trade, so there's not going to be anyone who wants to take the other side of the trade. And when the trade becomes too crowded, as we say, then it is not likely that it will work out. And you can see right now a big squeeze here above the highs, strong candle here. Although previously, if we zoom in a little bit, you can see here a pin bar forming. So maybe a lot of people probably were expecting the short here because this was the pin bar here. And the pin bar means that we sell off, just like we did here. But it is too obvious, the trade is too crowded, so this could have been expected, and now we have the very nice squeeze pattern. At the same time, we can see, if we draw the trend line here, that each time price moved into the level, the sell-off became shorter and shorter. So the first time we moved into the level, price sold off. Then the next swing high, we moved back into the level, price sold off much less, so we start here. It's not even halfway between the swing points. Then the third time here, price only made it here, and now the final time here. So this is also those are also clues which you have to take into consideration when analyzing such a level. So it's not a good sign that price keeps bouncing in the level and the retracements or the pullback away from this level become shorter and shorter. This also shows you that there's not a lot of selling interest anymore and price gravitates towards this level. And now here we can see a very nice support area to the downside. Swing low, swing low, swing low, lots of swing lows, and then the break. And before that, it was not respected that much. So this is the first time that we see this level being established. And then here again, this was a very long time. Price did not trade into this level. Price came back into it. It rallied very strongly off of the level here. Then it came back. Let's zoom in a little bit. It came back into the level much sooner this time. Here even a false breakout, a false test. So we did not quite reach the level, but here we did. Then the next time you can see here, price never really pulled away from the level. Then here we had some type of a squeeze, although very short. But you can see here the distance is becoming much shorter, and lots of tries here to get into the level. And then here price just bounced in this level here again and again. You can use a few arrows. So very short and another one very short. And then here what happened, price broke the level eventually and then traded around it. But even more important, very similar to what we saw on the resistance example, price moved back into the level. We shot higher here a long wick, which could have been seen as some type of rejection pattern by traders who want to get into a long trade here. And then what happens? The pattern fails and the trade is too crowded again, and everything happened like what we explained on the resistance example. At the same time, we can see here price was coming down here. Although this is not a perfect trend line, we can see what it is showing. So we have the high here, a lower high, a lower high, and each time we bounce into this area, the pullbacks or the rallies of the level become smaller and smaller until eventually there is no selling power or no buying power left anymore, and price just breaks this level here and then trades around it. So those are clues which you have to take into consideration when analyzing price charts, and especially when analyzing important support and resistance areas. And don't just trade blindly off the levels because you think they look very good and very obvious. If something is too good to be true, then in technical analysis this is often the case, and you should stay away from such a level and wait until you have very clear confirmation.